Well, let's check in on those markets for you with the US still asleep. Of course, we start in the EU. Now, the European Commission has demanded that the United States stick to the terms of those EU-US trade deal details reached last year after the US Supreme Court struck down Donald Trump's global tariffs, and he responded with those new levies across the world of 15%. So let's see what's happened with the markets this Monday lunchtime. The FTSE 100 at the moment relatively flat, down 0.06%. In Paris, the CAC 40 also flat, just down a little bit, down 0.01%. And then the DAX also trading a bit of water there earlier on, but now down 0.44%. So that's the general picture for the European markets. The oil share has been rather strong today, quite a strong position actually. Implats, Naspers and Quilter all up and driving that position. You can see now the oil share was up 1%, now up 0.9% at 124,123 points. Resources 10 also doing very strong today. Those gold miners up once again, 1.44%. Financial 15 up 0.31%. The industrials also doing very well today, up 0.98%. So a very strong Monday for the JSE. Well, joining us now for his take on how markets have kicked off the week in trade is Reko Nare from Anchor Capital. Reko, hi, good to chat to you once again. Like I said, a very strong start to the week on the JSE. What are you seeing with the oil share?
Hi there, Ray. Thanks so much for having me. It's great to be on the show. As you said right at the beginning of the show, you're seeing a very resilient all-share index. You're also seeing a very resilient rand. If I think about the all-share index, up about 0.9% at midday. Financials, 1% at midday. Industrials, up about 1%. And resources, not too far behind at 0.9%. Look, that along with our resilient rand, that's been supported. Of course, the rand move has been supported by, a softer US dollar on the back of the information that we got at the end of the week in the form of the Supreme Court of Appeal striking down the Trump administration's use of IEPA. I'm sure you'll get to that, but I think that softer US dollar move along with the supportive commodity prices is making for a stronger rand today. And then, that strength has looked like 0.3%, around about 15 rand 98 cents to the US dollar in early trade today. And I think with that, investors then turn their eyes, local investors that is, then turn their eyes towards Wednesday's budget speech to kind of give more clarity around the course of play for 2026.
Yeah, it's interesting. Wednesday is right here now. What are you expecting, Reko? I mean, the market's, of course, very cautious at the moment, but there's so much ground to cover on Wednesday.
Yeah, I will say, look, Ray, with our expectation as Anchor, we usually publish a wish list when it comes to the budget speech. And I think what we're hoping to hear is we're hoping to hear from the government just a clear commitment towards fiscal consolidation. And when we speak about that, we're just speaking about, just a credible path towards stabilizing and reducing our debt. So I think that's probably the biggest of our wishes. That along with, no announcement around increasing taxes and just emphasizing, kind of the revenue efficiency that we've come to know and see. That along with just, the growing reforms that we've already seen, the continued improvement within the SOEs. That's, of course, been constructive for the SA macro picture, along with, infrastructure delivery. That's also been supportive. So overall, just policy clarity is what we're hoping to see and hear, Ray, out of Wednesday's budget speech.
Yeah. Right, let's break things down a little bit from today. Let's start with Spar. And of course, you saw last week the resignation of their CEO. And these results coming out today, they're growing little by little.
Yeah, Ray. So look, their share price down 43% over the last 12 months. And just today, a -4 in the back of the announcement of these results. I think when you look at these results, look, I guess there's a case to be made for both a bull and a bear here. Group turnover 2.1%, South African turnover 0.9%. So you are seeing the core SA business weakness there in that business or softness there. And then you are seeing margin pressure, which I think is not only akin to just Spar. I think you're hearing that across the different discretionary retailers. So you are seeing margin pressure here in what we know to be a very highly competitive environment, a retail environment that they operate in. But I will say on the positive side, Ray, you are hearing some type of constructive picture around, the strategic cleanup that's happening here. You, of course, remember there was the exit out of Poland. There's been the UK exit that's progressing well. The SAP overhang seems to have de-escalated, and then you've got share buybacks on the table. So I think, look, where we're currently sitting from a valuation perspective, you are seeing some slow recovery here, but I think the restructuring will probably be what brings investors back to the table here.
Yeah. All right, that's Spar. Now, Sasol today, not good results. I know they do have price pressures, but there's still things to watch there.
Yeah, Ray. So look, for context here, that share price is up about 57% over the last 12 months. But I think since year to date, you have seen a little bit of softness there and a little bit of weakness beginning to creep in here. And this was a first half 2026 set of results. And essentially what it showed at a top line, revenue flat at about 122 billion rands, adjusted EBITDA down 12%. You mentioned headline earnings, in other words, the HEPS down 34%. And I think so on the constructive side, you did see the free cash flow, as you mentioned, up 100% to 100 or rather 800 million, which is the first time that free cash flow has been positive since the last 4 years. So I think, look, once again here, you've got an operational turnaround, specifically within the SA business that looks to be delivering. What I did take away from this set of results is the Secunda numbers. Those Secunda volumes up about 10%. Okay. So I think, look, you do have a lot to kind of work through here in this set of results. That's 7.8 billion rands in impairments, the Mozambique production sharing agreement issues there, and weak chemicals market. But I think overall, you've got a stock that's reflecting concerns, I guess, around those impairments and around really where the state of the chemical cycle is rather than where the state of the oil market is currently.
Reko, that's great analysis. It really is. The devil's in the detail. Right, let's go back to the United States now. On those tech shares, we had a week of them going down. Then last week they went up. How are we looking this week? Because what I'm seeing is they're going down again. We've got NVIDIA later on this week.
Yeah, Ray. So look, where we're currently sitting is we've got, US futures signaling about a 0.5% loss at the open. We'll see how that plays out as the day progresses. But if I think about how we ended off yesterday, or rather last week, Friday, the Dow down about 0.5%, the S&P down about 0.7%, the Nasdaq rather up 0.9%. And I think a lot of that was driven by, you remember those AI concerns that weighed on the market for much of last week, though that overhang beginning to clear up. And then, of course, we saw the Mag 7 rebounding into Friday. I think as an aggregate, they're up about 1.6%. But I think at the exact same time, it's tech is not a monolith. At exactly the same time, while you've got the Mag 7, growing about 1.6% Friday, rebounding 1.6% on Friday, you did have the cybersecurity stocks selling off very sharply on Friday as well. If I think about CrowdStrike, Cloudflare, all down about 8% yesterday, all on the back of this AI-related development. So I think that, along with progressions around, Donald Trump and the Supreme Court of Appeals ruling, that I think will drive, a lot of the direction that we see within the US market and global markets in the week ahead.
Yeah. Right. What are you hanging your hat on this lovely Monday with your stock pick?
Yeah, Ray. So I'm going to stick with global, and this time I'm going to stick within that consumer staples theme that we've seen a lot of rotation into. And for that, I'm going to look at Diageo. That's a UK-based international manufacturer and distributor of premium alcoholic beverages, the likes of, the Don Julios, the Smirnoffs, the Johnny Walkers, the Tanquerays. From a valuation perspective, Ray, that's where I always look, currently trading on a 19 times forward earnings versus the 23 times 5-year average. So in other words, trading very much at a discount to its average. And this is a high quality business, a high quality global brand that you can pick up at a discount. So I think, strong pricing power here, a wide economic moat, and a robust cash flow. So that's Diageo. You can catch that on the London Stock Exchange, DGE.
Nice one, Reko. Thank you so much. Good to have you with us this Monday on Business Lunch. Thank you. That was Reko Nare from Anchor Capital.